Welcome to Dr. Fred Markets. This is not financial advice. The gap between those who understand finance and those who don't is growing every year. Markets, crypto, artificial intelligence, they just require attention. You showed up today. You're on the right side of that gap. Let's make it count. Let's go.
AI just turned the S&P into a slot machine with a PhD. If you don't understand that, you're the liquidity exit. Verdict: US stocks are no longer the economy. They're an AI arms race, and human investors are the meat in the grinder. Signal 1. Nvidia down 4.4% today, while the S&P 500 bleeds 1.2%. When the chip printer of the AI religion sells off, that's not volatility. That's the market quietly repricing who actually runs the show. Nvidia is the pick and shovel of the AI gold rush. When the shovel shop stumbles, it exposes a simple truth. This whole market now trades on AI expectations, not earnings or GDP fairy tales. Signal 2. AI is no longer just inside the companies, it's inside the market's bloodstream. Over 60% of US equity volume runs through algos and quant systems. A growing chunk of that is now LLM boosted, parsing news, sentiment, even those horrific headlines about kidnappings, storms, and scandals, and auto-trading in milliseconds. You read Nvidia 4.42%. They read risk-off AI complex, rebalance now. You see Pope visit. They see France travel, spending, volatility clusters, correlations. You are scrolling. They are front-running your ETF. Signal 3. AI is not only trading stocks, it's picking the stocks inside your safe index funds. BlackRock, Vanguard, State Street, these giants quietly plug machine learning into factor models, risk engines, ETF construction, even what gets marketed to you as a broad market fund. The S&P 500 at 739.17, down 1.2%, is not 500 American companies doing business. It's 500 AI-optimized risk parcels curated by machines that never sleep. Your retirement account is already co-managed by code you'll never meet. Here's the cliff. You still think you're investing in America, when in reality, you're just co-signing an AI trading experiment on your future. Now the connection. Nvidia's stumble isn't random noise. The algos trade Nvidia as a leveraged bet on the AI takeover of the entire stock market. When AI-exposed names wobble, the machines don't ask questions, they yank exposure across the board. That's why the S&P drops in sync. The index has become an AI sentiment meter, not a diversified basket. The vulture's nest is simple. 1. Companies stamp AI on their earnings calls. 2. AI-driven funds and algos scrape the transcript, boost weightings in AI winners. 3. Nvidia feeds all of this by selling the chips that power the funds that buy the stocks that talk about AI to impress the funds that, you get it. You are not in a stock market, you are in a recursive feedback loop between AI hype, AI chips, and AI-driven capital flows. Human narrative is the veneer. Machine logic is the engine. Here's the one thing nobody tells you. The S&P's biggest edge is no longer owning the market.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Its real edge is that you are getting free access to AI portfolio construction that retail investors could never build alone. Yes, you're the exit liquidity in the short term, but if you understand the mechanism, you stop fighting it and start using it. Mechanism, in clean English, AI now decides which stocks stay in your index, how much weight they get, how they react to macro headlines, and when passive flows stampede or out. So instead of pretending you can outtrade Nvidia or front-run LLM-driven funds, you learn the one rule that actually matters. Stop picking random names. Start picking which AI regime you're hitching your wagon to. 3 concrete moves to stop being the sucker. First, choose your AI exposure, not your stock story. You want high AI concentration? That's your mega-cap tech AI basket. Nvidia, the hyperscalers, the obvious chip mafia. High upside, high whiplash. You want AI in the background? That's broad US indices like the S&P list drama, still AI directed under the hood. But stop lying to yourself that buying the market is neutral. You are buying the AI regime. Declare which one. Second, front-run the machines by watching their god, volatility. Don't watch CNBC emotions. Watch when big AI names and the index move together sharply like today. Nvidia minus 4.4%, S&P 1.2%. That correlation spike screams, AI crowd is de-risking the whole complex, not just one stock. In those windows, you don't YOLO weekly calls. You either sit still or gradually add to long-term positions you actually want because the machines are doing the panicking for you. Third, stop fantasizing about beating AI traders. Draft behind them instead. If your time horizon is years, not hours, your job isn't to outcompute an H100 cluster. Your job is to regularly buy the exposure where AI is strongest, broad US indices or structured AI tech funds. Ignore the short-term narrative spasms and understand that your edge is human, patience, not speed. You just learned the single uncomfortable truth. The US stock market is already an AI-managed product, and your S&P fund is secretly your cheapest AI portfolio manager. This is not financial advice, but this is the truth. Summary. 1. Nvidia's drop and S&P's slip show the index now dances to AI's tune. 2. AI doesn't just trade stocks, it designs the structure of your passive portfolio. 3. Your only real choice is which AI regime you ride and for how long, not whether AI runs the market. If you want more brutal clarity on how AI is rewiring your money, subscribe and come back tomorrow. The machines are already here. You might as well understand their rules. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.